As my man Flava Flav would say, don't believe the hype. We are in a corrective wave, but this market is not crashing, and I'm about to blow your mind. This is Invest with Jacob. Okay, guys, so with the market selling off again on Friday down to the lows, it brought the media out in their bear suits, yelling from the top of the mountains that the bears are here and the bulls are done and we're all going down and the market's done. We're all losing our retirements. But they did that in a reactionary way. They got to see what happened and then said it. What if I told you that not only did I expect this move from the level we got it from, I predicted it 6 months ago, and I can prove it. I'll get into that in just 1 second. But first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the S&P 500. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. Okay, guys, so if you've been watching this channel for any time and you've seen my big picture video, and if you haven't, go watch it. It's the main video on my channel, and I'm going to bring it up here in just 1 second. I predicted this 6 months ago in that video. I predicted that we would actually move up to 49.50. We missed that target, and I'll explain that here as we drill down into the charts. But I predicted we go to about the 48.50, 49.50 zone, and then we would see a big pullback towards 42.50. So let's jump into that video and look at that chart. So this video, guys, it's the S&P Big Picture Elliott Wave Theory video. It's the main video on my channel, the first one you see when you get there. Here is my Wave 3 target, right here, just below 5,000. So this line right here is 5,000, and on these charts, when you put your dot on your target, it puts the number above it, so it looks a little higher, but it's actually at about 49.50. And then I said we'd pull back to about 42.50. So 6 months ago, I predicted that we would move up to the 4,800 to 4,900 zone. I said 49.50. We missed it by a little bit. And then I said we'd pull back to about 42.50. And we may or may not get to 42.50, but we've gotten darn close. So when these guys see a reactionary thing and emotionally come out and tell you that this is over because of this, I tell you to rely on Elliott Wave Theory because it consistently hits its targets and predicts where the market is going in the big picture. Now, I openly admit in the macro or in the micro picture, it does have its flaws. It is very hard sometimes to figure out the short-term paths, but in the big picture, it is absolutely untouchable as an indicator. So let's jump into some charts and take a look at what's going on. Okay, guys, so here we are on the daily futures chart, okay? So we're on the ES chart so we can see the overnight move as it's happening and trace all those overnight waves and stuff that happen. But we are on the daily futures chart here. And back here, okay, when we got our 1 and 2 in place, we used our trend-based Elliott Wave tool, trend-based fib extension, okay? So we draw up to the top of 1 and then to the bottom of 2 from the absolute low, which was the COVID low. And that gave us this 1, 2, 3, 6 target up here at 49.70. And that was where we were looking for this wave to actually top. We thought we would get there, but we got kind of a weird structure here and didn't quite make it to the 1, 2, 3, 6. But we did make it over the 1.0 and up to 48.08, which when you call it back here at 3,200 or whatever, 3,100, whatever it was back here, pretty close. That's pretty good. I'm pretty excited about that. We also called for wave 4 here to come back to this 42.50 region. Now, why did we do that? Okay, so the way Elliott Wave works, if you're new here, guys, is when you get a 1, 2 in place, you use the fib extension tool, and you would expect wave 3, most commonly, to hit the 1, 2, 3, 6 extension first, okay? If it's a weaker wave 3 or it might be an ABC up, then you would expect it to hit the 1.0 extension as a secondary target. But the most common target is the 1, 2, 3, 6. So that's where we got our first number at trying to get to 49.70. It got between the 1.0 and the 1, 2, 3, 6, so it didn't quite make it there. Once wave 3 is in place, you expect a wave 4 to pull back to test the pivot. Now, if you've been watching this channel for any amount of time, you know that the pivot is the 0.618 and 0.764 fib extension of waves 1 and 2. So when we draw in 1 and 2, okay, it gives us our level, our first target here at 49.70, but it also gives us our pivot on the way up. So when we see 40.97 to 43.03, that's what we were looking for down here. If we busted through 43.03, then we felt like we were well on our way towards 49.70, and we were. We got to 48.08, as I mentioned. So the pivot gives us an idea that we are in a wave 3 once we bust through it. Now, as I said, once wave 3 is in place, we look for wave 4 to come back and test the pivot. Now, where it tests the pivot depends on how high wave 3 goes. If we hit the 1, 2, 3, 6, okay, we would expect it to come back and test the 764. Why? Because wave 4s most commonly target the 382 retrace of wave 3, okay? That is their most common target. So if you move this line, this 0 here, I have it at the top of where wave 3 topped, but if I move it up to the 1, 2, 3, 6, okay, you can see that the three, it overlaps here, but you can see that the 382 and the 764 are the same line. So that's why the pivot's important for support and understanding where we're expecting this wave to come back to. If it goes to the 1.0 extension, okay, down here a little lower, you would expect it to test the bottom of the pivot, and you can see the 382 and the 618 overlap here, okay? But we were kind of right in between. We didn't make it to the 1236, and we were over the 1.0, so it gives us a target of about 4,200 for this 382. So I'm expecting a little bit more down move, and we'll drill down into that here in just a second, but I'm expecting a little more down move. However, this is a good place to start accumulating a long position, because now the up move is going to highly outweigh the down move. Okay, so this move down that we're seeing, that everyone's panicked about, that everyone is calling a top, and everyone's calling the bull market is over, I talked about it 6 months ago. I knew this was coming. I've been talking about it for weeks in my videos, that if we break key supports, we're starting wave 4 down, and we did. So here we are. So guys, this is really important to understand if you want to be good at Elliott Wave Theory. You need to know fib levels, and you need to know the pivot. The pivot is super important. Okay, so this is a major pivot because it's a major wave 1 off of this wave 4 low and a major wave 2. So this becomes a major market pivot, and this will tell us when the bull's market is over. If they pull it back through this pivot at basically 4,100, it's 40.97. If they pull back through this pivot, then I will get on board with the bull market being over for now and the bear market ensuing. Now, completely over, we'll see how it takes shape, but that is the first step before I will even consider that we are approaching a bear market and the bull market being over, as they would have to break the bottom of the pivot. Okay, so this is nothing unexpected. In fact, it was predicted, so I'm not even concerned about a bear market at this moment. So what do we need to see now? Let's switch charts and drill in just a little bit. Actually, before we do that, let's look at the MACD on the daily. So guys, the MACD is a great indicator for rallies. You can see down here it was pegged COVID low, lowest it's ever been, but that was a huge sell-off. We expected that. And you can see what kind of rally we got off of that huge MACD pullback there. So over here, you can see the 2019 crash. All right. We got a huge rally when the MACD reached that level. Okay. Every time the MACD on the daily gets down here, we see huge rallies. And right now we're very close to that 2019 level. That's our support area. And we're very close to that level. So we should be seeing at least a bounce, but we should be seeing a pretty big rally coming. And what I'm expecting once we bottom in this wave 4 is a move to about 5,500. So you're looking at from here, because we're at about 4,400 right now, 4,420, you're looking at 1,100 points of upside versus a couple hundred points of downside. So if you want to start accumulating a long position, and I'm talking like end of the year, start of next year type position, to capture this move up, this is a good place to start. Maybe get a third of a position, okay? And if we get a B wave and a C wave down to 4,200, grab another third or half, okay? And then if we break the low, then you can get out. But the risk reward is starting to get really good to the upside. All right? So the MACD at support, pulling back towards our targets. And then we'll look at some other things here that tell us that I think a bounce is coming, and it looks like we've already started to bounce today. We're up about 30 points or so. In the pre-market, we'll see if that holds. They've had some bounces that have not held. The bears have been pretty impressive in this area, but not to be unexpected on a wave 4 down of this degree. Okay, guys, so over here on the hourly chart now, we're drilled in, and we're looking at a few possible scenarios. I've been talking about this structure. I don't love it. I don't love it as a 5-wave move down, but it is possible. It's possible that it's 5 down, and this is the C wave. I still think it can be an A wave, and we see a B wave bounce. If that happens, we are now targeting 45.95 to 47.08 as our B wave target, with the most common area being around 46.50. It's actually 46.45 here at the 618, but 46.50, I like to use round numbers, is where I'd be targeting if we're going to see a B wave rally. So the first option is we bounce up out of here in a B wave towards 46.50, and then see our C wave down that would take us into that 42.50 area, which would take us down to the 382 that I showed you on the daily chart, which would make a lot of sense. Okay, so that's one option. The second option is that we have completed 3 waves down. You can see I have it marked here, 1, 2, and 3 down. And then we would need a wave 4 bounce. So in that case, we have to move this fib down so that we can retrace wave 3. And in that case, we would be targeting a bounce to about 45.20 in wave 4, and then a move down in wave 5 towards about 4,300 or maybe 4,275, somewhere in that area, to complete the bigger wave 4. Okay. So that's the second scenario, is that we have 1, 2, 3 in place, and we get a wave 4 bounce at 45.1850. So if it breaks through 45.20, guys, that's a sign that we're most likely in either the B wave or our next option. The final option is, guys, the 1 hour MACD is oversold and at support. The daily MACD is oversold and at support. We're ready to support a rally. Now, whether that rally is a quick bounce and then down or an actual rally, I'm not sure yet because the structure is not very clear. But if we get a 5-wave move off of this low or off of the next low, off of any low that we see, if we see a strong 5-wave move up in an impulsive structure like we're looking for, then it's very possible the bottom is in. We have retraced past the 236, which is basically the minimum area you would want to see for a wave 4, but the more common target is the 382, which would be down around that 4250 area. So what we're watching, guys, is essentially, I talked about this last week, everything is set up for a bounce. Now, whether that bounce is corrective or impulsive remains to be seen, but we're looking for a bounce up out of here. If it's a 3-wave bounce into our box, then we're looking for a C wave down to about 4250. If it is a bounce that cannot break through 45.18 or really 45.20, we're going to call it, then we're looking for another sell-off down to about 4,300, maybe 42.75 in that area. Or if we see a strong 5-wave structure up here, then it's very likely we have started the next rally. We do have enough waves in place that I could count, and we do have enough of a move down to satisfy a wave 4 here. So a little bit cloudy in the area we're in, okay? And that is where some of the Elliott Wave Theory flaws come in. The short term is not as strong as the long-term macro view, but the macro view is on point. It hits its targets, okay? So quickly, to recap, if we bounce up to 45.20 and fail, very likely we sell off back to 4,300 to 42.75 to complete the C wave down and all of wave 4. If we blow through 45.20 and we make a 3-wave structure up into this box, very likely it's the B wave, and we should expect one more sell-off down to the 4250, 4200 area. And finally, if we get a clean 5 waves up, then we are looking at an impulsive rally to start our move towards 4,500. Again, guys, the upside is heavily outweighing the downside. We bottomed at 43.81 for now, and we're at 44.20 in the pre-market. So you still have 1,100 points of upside towards 300 points of downside. So I would get a position here early, just a small one, like a quarter or a third position, and then accumulate more if we move lower, because what you're not going to want to do is miss this rally should it happen. This rally will be fierce when it is an impulsive rally up, and it will move several hundred points very quickly before you realize that it's here, and you will miss a lot of the move up. So start accumulating near the lows. You don't always have to catch the exact low, and understand your risk reward. Okay, your risk is about 300 points down to break the pivot, and your reward is 1,100 points up. And again, I'm targeting end of the year, start of next year to hit that target up. So guys, if you like the information that I put out in these videos and you want real-time market updates from me, you need to get in my Facebook group, okay? There's a link down in the description. Go ahead and click that link, all right? It will take you over to Facebook. Now, when you get to Facebook, you do have to get approved to get into my Facebook group, but the only thing that I ask, okay, is that you subscribe to my YouTube channel. So hit that subscribe button down below. Come on over to Facebook, and I'll get you in. And to get the most out of the group, click this featured button right here in the middle. Scroll down, you see a link, okay, to my documented trades. That's everything we've traded on the channel since I've started it, as well as a link to my Slack channel. Now, Slack is a free chat channel, and I am on there all day giving out real-time market updates, answering your questions, and giving you my buy and sell alerts. It's an incredible group of traders from the very expert to the very beginner, okay? And it's a great place to learn or improve your trading. So come on over, guys, and let's make some money together. All right, key takeaways for today. We're going to see how this bounce plays out, okay? They faked us out with some bounces before. We're going to see how much strength this one has. It needs to at least break 44.66 to be considered a wave 4, but I would like it to see it up near 45.20 for that. So if we see 45.20 and a fail, then we are looking at wave 5 down here towards that 4,300 area. If we see a blow through 45.20, then it starts to become more likely we're in that B wave bounce up towards 46.55. We get that, and we're looking at a bigger sell-off down towards 42.50 to 4,200. And if we see a strong rally and a 5-wave impulsive move here, guys, then it's very likely we've started the next move up, and there is some support for that, but that is our third path to follow, okay? My main path, I'm still in between this 4 and this B. I don't really have a preferred path or what I would call a primary path. I think either one is reasonable. So I don't have a primary, but I am in between a bounce to the 45.20 to 46.50 area in one of these two scenarios. And then I'll be watching for a 5-wave move up to start wave 1. Okay, guys, it's a start to the week. Let's have a great week. That is the market update for today. I'll talk to you tomorrow.